Hello, everyone, and welcome back to the Financial Freedom Show. If you're new here, I like to talk about personal finance, investing, and how to make your money work for you. In today's video, we're going to dive into the Vanguard High Dividend Yield ETF, otherwise known by its ticker symbol VYM. We'll cover what VYM is, how it works, its performance, and whether it might be a good addition to your investment portfolio. So without further ado, let's get started. First things first, what exactly is VYM? VYM is the ticker symbol for the Vanguard High Dividend Yield ETF. This ETF is designed to track the performance of the FTSE High Dividend Yield Index, which includes stocks of companies that typically pay higher than average dividends. The primary goal of VYM is to provide investors with a way to earn higher dividend income from a diversified portfolio of high-quality dividend-paying companies. This makes it an attractive option for income-focused investors looking to generate a steady stream of passive income. So let's talk about how VYM works. When you invest in VYM, you're essentially buying shares of a fund that holds a diversified portfolio of high dividend yielding stocks. The fund's managers select these stocks based on their dividend yield, financial health, and other criteria to ensure that they can sustain and grow their dividends over time. The ETF is passively managed, which means it aims to replicate the performance of the underlying index rather than having a manager that's actively picking stocks. This passive management approach keeps the expense ratio low, which is one of the key benefits of investing in VYM. It also keeps the turnover ratio low, which is the amount of times that the fund sells stocks and buys new ones. By holding a wide range of dividend-paying stocks, VYM provides investors with exposure to multiple sectors and industries, reducing risk associated with individual companies. Now let's take a look at VYM's performance. Historically, VYM has provided a strong combination of dividend income and capital appreciation. While the performance can vary depending on market conditions, the focus on high-quality dividend-paying companies has generally resulted in a steady and reliable return. One of the main advantages of investing in VYM is its low expense ratio. The expense ratio for VYM is currently around 0.06%, which is significantly lower than the average for similar funds. This means that more of your returns stay in your pocket rather than going towards management fees. Additionally, VYM has a relatively high dividend yield, which is particularly attractive for income-focused investors. As of the latest data, the dividend yield is around 3%, although this can fluctuate based on market conditions and the underlying company's dividend policies. Now let's discuss the benefits of investing in VYM. One of the main advantages is the focus on high dividend income. By investing in companies that pay higher than average dividends, VYM provides a reliable source of income, which can be particularly beneficial for retirees or those looking to supplement their income. Another benefit is the diversification. VYM holds a broad range of stocks across different sectors, which helps spread risk and reduces the impact of poor performance by any single company or sector. VYM also benefits from the stability and quality of its holdings. By focusing on financially healthy companies and a strong track record of paying dividends, VYM aims to provide a more stable investment compared to funds that include riskier, low-quality stocks. Lastly, the low expense ratio means that you get to keep more of your returns, making VYM a cost-effective option for dividend-focused investors. While VYM has many benefits, it's also important to consider the potential risks. One of the main risks is that the fund's performance is closely tied to the health of its dividend-paying companies. If these companies face financial difficulties or decide to cut their dividends, it could negatively impact VYM's performance. Another consideration is that VYM may underperform during periods of rapid market growth because it focuses on dividend-paying stocks, which are more mature and stable. It might not capture as much upside as growth-focused funds during bullish markets. Additionally, like all investments, VYM is subject to market risk. Changes in economic conditions, interest rates, and other factors can affect the value of the underlying stocks and consequently the ETF itself. Lastly, while the expense ratio is low, it's also important to compare it with other similar funds to ensure that you're getting the best value for your investment. So is VYM the right investment for you? It really depends on your financial goals, risk tolerance, and investment strategy. If you're looking for a reliable source of dividend income from a diversified portfolio of high-quality stocks, VYM can be a great option. VYM is especially suitable for income-focused investors, retirees, or anyone looking to supplement their income with dividends. However, if you're seeking high growth or you have a higher risk tolerance, you might want to consider other investment options, or if you're earlier on in your journey, you might want to consider a growth fund. In conclusion, the Vanguard High Dividend Yield ETF, or VYM, offers a reliable income-focused investment with low costs and broad diversification. By focusing on high-quality dividend-paying stocks, it provides a stable and attractive option for those seeking steady income and potential capital appreciation. Here's a few final tips before I go. Number 1, always consider your risk tolerance and investment goals before choosing an investment. Number 2, understand the role of dividend-focused funds in your overall portfolio. Number 3, keep an eye on the economic conditions and the health of dividend-paying companies. Number 4, compare expense ratios and performance of similar funds to ensure that you're getting the best value. If you found this video helpful, please be sure to give it a thumbs up and don't forget to subscribe for more personal finance and investing tips. Leave a comment down below if you have any questions or if there's a specific topic you'd like me to cover in a future video. Thanks for watching, and I'll see you in the next one.